The Coca-Cola Company beat Wall Street's estimates as the soda giant grew revenue and volume across the globe in the fourth quarter. Here to discuss that and much more is the CFO and president of the Coca-Cola Company, John Murphy. Thank you so much for joining us.
Good morning, Brooke. Nice to be with you.
I want to start with the state of the consumer. Consumers seem to be responding to Coca-Cola's strategy here. Can you quickly break down the consumer environment, in particular in the U.S.?
So, in the U.S., the consumer has remained pretty resilient overall. We have, I expect to continue to have some pockets of weakness, some pockets where, lower income, disposable income consumers are under pressure. And we see that as a slight headwind and continuing. But the overall environment has been pretty resilient, and indeed we grew volume in the fourth quarter in North America, reflecting that overall resilience. Around the world, it's in general we saw pretty good momentum too. I think in the developing world, you're always going to have a little bit more of the sort of spikes up and down throughout the course of the year. In Q4, we were pleased with some of our big developing markets. India was strong. China showed some good momentum. And so all in all, we were pretty pleased with how we came out of Q4.
John, here in the U.S., President Trump has enacted a 25% on aluminum imports. What sort of impact will this have on Coca-Cola's business?
So our business, Brooke, in the U.S. and indeed around the world is primarily a local business. So most of our inputs are sourced locally. Here in the US, we will have some impact from the aluminum tariffs, but we think they are manageable within the overall context of the supply chain, the multi-billion dollar supply chain that we have. So, it'll have some impact, but we've got a lot of levers at our disposal. It's another variable to add to the equation. Over the last few years, we've seen many surprises along the way, and we've learned how to adapt, and we expect to continue to do so into 2025.
Are canned soda prices going to take a hit because of Trump's tariffs? Will consumers feel that impact with a higher price?
We don't anticipate that at the moment. We'll see how things play out in the course of the year, and we will adapt accordingly. But right now, we don't see that being a factor. We're well hedged into 2025 already, and as I say, it's as a part of the overall input mix. It is a relatively small amount. We'll see. As I say, we'll see how things go throughout the course of the year and adapt appropriately as we have been doing.
Will you use more plastic in the future? Is there ever a world where we could see a box to Coca-Cola?
We are unlikely to see a box in your supermarket shelves anytime soon. We have a great portfolio of plastic, of cans, of aluminum, and we expect that to be actually a big part of the equation going forward. Adjusting to different sizes, adjusting to the makeup of those packages is an ongoing part of our innovation agenda. And as we've demonstrated through our revenue growth management equation over the last 3 or 4 years, we expect that actually to be an advantage to us as we move forward.
Commodities are expected to come in at low single digits for the year. What key ingredients are you seeing that sticky inflation still?
So in our case, on the commodities front for the Coca-Cola Company, the agricultural commodities, specifically orange juice and coffee, are at elevated levels, and we are assuming that will be the case for 2025, and that's been built into our guidance. The industrials, putting aside the question you posed on tariffs, the industrials are pretty stable overall, and so all of that adds up to a sort of low single-digit number for us in 2025. Our bottling partners around the world, they have more input costs to deal with on the packaging front, and with sugar as well. and some of the other agriculturals. And it's situational. It just depends on what part of the world you're in as to the exact impact it will have for them. But all in all, for the system in general, we feel pretty good about being able to manage the commodity equation for 25.
Speaking of 2025, Coca-Cola expects a higher revenue growth than your closest competitor, PepsiCo. Are you taking share from PepsiCo? And if so, what's the key strategy that you think you're winning with?
So we're just primarily focused, Brooke, on the consumer, understanding, anticipating what consumers are looking for around the world. We've got an equation that's made up of many parts. We've been working really hard on getting that equation right for a number of years now. I think James said earlier there's no silver bullet to this formula. And so it's a combination of the momentum that we have. We have over 28, I think it is now, $29 billion brands in our portfolio around the world. Those brands allow us to drive scaled execution, and scaled execution is the biggest way to create sustained value in your marketplace. We've demonstrated that. We've gained value share throughout the year gone by. And while we expect the competitive environment to continue to be robust, it's one we actually enjoy, and looking forward to demonstrating in 2025 that, again, the sum of all of the parts that we have been working so hard to bring together will give us the results that we are guiding to this morning.
John, speaking of a little friendly competition here, Costco is switching its food court option from PepsiCo to Coca-Cola this year. How big of an opportunity is that for Coca-Cola?
We're always super honored to have great partners joining us to bring consumers what they're looking for, and in this case, to be back in the front of Costco after many years, it's wonderful. Our team has been very, very focused on building and strengthening this partnership, and we're super excited to be back. Looking forward to a great 25 ahead, and indeed for many years to come.
John Murphy, CFO and President of the Coca-Cola Company, thank you so much for joining Yahoo Finance.